The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome, traders and traderettes, to another excellent edition of the Power Trading Hour with me, your humble and lovable host, Rick Dees. And as another day starts, we've got another, what would you call it, a day of volatility in the marketplaces. I'm thinking that we are going up higher. Probably going to tag 1883 on the S&P cash in the next few days. And if it could be all things perfect, we get a pop, and then that pop the next day would be sold, and we get an island reversal, and maybe we get a top in here. But I was talking in my newsletter this morning. One of our guests, trader guests of, about 1998 to 2003, was a very skilled trader, and his name is Tim Ward. Not much around. You don't hear much from him much anymore, or at least in the circles that I travel. Maybe he does a lot more, maybe out west. But anyway, probably the most interesting, and one of the most interesting things that I heard early on from him, and I assume it's from him, was that if you get a stock that just hangs out at the highs, even a little bit, how can I say this? Just if it just hangs out there at the highs, what can we do? And it's, how can I say it? If it was say that a stock's bouncing against $50, and it gets up to $50 and it pulls back, but it pulls back $2, then it goes back up and tries $50 again, and of course the volume's real light, and then it comes back and tests $50 again. Eventually, that thing's going to break out, even with light volume. And many times, what you can get is a gap up and a gap back down, leaving island reversal back up at those highs. But you kind of have to watch for it. If it breaks out, volume comes in, then you buy the pullback. If it breaks up and there's not a lot of volume and there's no sign of strength, a big candle with a lot of price change intraday in there, if it just pops up, let's say S&P had popped up 20 points one morning, had less than maybe a 10-point range in the day, that probably wouldn't be a sign of strength. Again, with probably not a whole lot of volume, maybe 3.5 billion shares on the New York consolidated tape would open you up to a lower close and the confirmation with that up there. So it's one of those things that you can actually think about. But I'm trying to run scenarios through my head where this basically shags everybody out of the traditional bearish positions just in time for the market to turn around. We've got a phone call early today. Stan from Atlanta. How you doing today, Stan?
Hey, pretty good. Thanks for taking my call. Now, I've got a stock kind of like what you were just describing. Bought it yesterday, GE. It's right where I bought it at. It's got a pretty good PE, pays a dividend. Just wondered your opinion on it.
Well, I don't think it's just bouncing around at highs, so this wouldn't be anything close to it. If it had just banged away at $28, just repeatedly over and over again, I would say that would be it. This thing is in what is more likely called a asymmetrical triangle. So if you took, let me do it here real quick. Are you watching on Tiger TV?
Yep.
Okay. Hang on just one real second here, and I'll try to get this up to have it here. What you have more likely is something like this, which is an asymmetrical triangle. If I just put a big greater than symbol on it, you can pretty much take it back to almost into January in this thing. And it's just going to be lower highs, lower lows, and this thing gets more and more into that apex. The rule of thumb is if it gets 3/4 of the way into that apex, the first move in this thing is going to be the false move. So it'll do a head fake, and I'm going to say it's 3/4 of the way to that apex. The first nice head fake is going to be the wrong direction. It'll go up there a few, 2, 3, 4 days, and then reverse the other way. So you want to buy this? You want to be long?
Oh, I am long.
Okay. Ideally, if you didn't have a position, the thing to do would be to watch this thing break down to maybe $24.50 or $25. Probably more likely $24.75, something like that. So it's very plain that it's busted out of this apex. And then as it starts to move back up, or that volume is light, that would be the place to buy it. But I just don't see anything in this one way or another. If you want to own it for the dividend, then that's one thing. But I don't know how you'd predict what this stock's going to do anytime soon. There's just nothing that I can hang my hat on. Go ahead.
It's been walking up the 200-day moving average for many months now. So I looked at that and said, well, it's going to walk on up. So.
Yeah, that's fine. I don't put or look at the 200-day moving average, but it's easy enough to get you to get a copy of Excel or another spreadsheet and just go through and see the statistical inference of 200-day and 50-day moving averages. I mean, it's one of the most simple things in the world to test, and I recommend that you do so if you're going to use it. But okay. it is pretty plain to me when I look at this is exactly what it is. It's an asymmetrical triangle where this thing is bouncing off highs, coming back down lows, and it's getting in an ever tightening pattern. And if this thing pulled down on light volume, I'd probably keep it. If it goes higher and the volume falls out, then watch out, because the next move is most likely about 75% of the time going to be a head fake.
Okay, thank you.
Okay, you bet. And that is the asymmetrical triangle pattern. But a lot of times when you look at these things, they just don't look like they're going anywhere or doing anything, but they are. And, of course, we're up 10 points on the S&P cash, just 1.9 billion shares for the day. So, again, up a higher, lighter volume. Not a lot happening out here in this market, but we are all kind of just trapped in this trading range. Anyway, we like to start off the show generally with a little bit of history. Back in 1809 on this day, the earliest known bank failure in the U.S. was reported when the Farmers Exchange Bank of Gloucester, Rhode Island, goes bust after issuing $800,000 in fraudulent loans against a total capital of $45. So they told everybody they had a bunch of cash. $45. Not bad for $800,000 in 1809. Interestingly enough. Box, the tech company, is decided to go for an IPO. And it is one of these companies that just on the basis of their S1 I hate, they generated $124 million in revenue last year while racking up losses of $168 million. Mark Cuban was involved in this from pretty much day one. After a couple of years, he didn't see eye to eye with the developer, the creative genius that they are pushing on CNBC over the last few days as the guy to be the Box CEO and originator. Mark Cuban actually said in a tweet last night, though, that if I were responsible for those numbers, he would combust. The idea that if you go and get a bunch of cash in an IPO, you can suddenly be successful is a rare proposition. Can they make money? Yeah. Is it ever going to be anywhere close to the valuation that this IPO is probably going to generate? The answer is no. And I think Mark Cuban was probably right. years ago. He probably would have made a lot of money on this IPO if he would have stuck with it. But still, I really dislike a lot of these companies that are coming as an IPO. And if we just had a bigger truck, we could make money. The answer is I don't think this company's going to scale any better than any other. And with one swipe of a pen, anybody at Amazon or Microsoft, I think, could pretty much put this company out of business. And again, maybe that we're seeing all these dubious IPOs with dubious values, and you can't see the books, and everything else is telling us that we're getting awful close to the end of the gravy train. And maybe we're going to have to start working for a little bit of our money in the stock market instead of just people pumping these things up on absolute total BS. And at least my bovine excrement detector went off on this one several times. I think this is about the third round in the last 6 months where they were trying to get this thing ready to go and out the door. So you can probably say that the books look just about as good as they're ever going to look now. But I go back and bring up a company that also has never made any money, and that is Angie's List. Let me get back here to my charts here. ANGI. And probably 85% of companies that come public are pretty much follow this kind of pattern, and that is they'll have a nice run. Everybody will talk them up. They get to a real high price. The underwriters dump all their shares at the highs, and the stocks does ABCs down into nothing. This one, even at it still needs to test 1188, but volume finally getting around. But again, that $10 level going to act as support for those people that bought this in their funds. But it's still not a stock that probably is bottomed. My guess is that this thing goes out of business in a couple of years after sucking everybody's money out the wazoo. And probably the same thing for Box. Like I said, maybe there's a 15% chance that thing does scale up and they're able to make money once they get a huge pile of cash. But I'm going to say 80% of the time, they end up just like Angie's List out here. They'll pump the thing up. I don't think that there's any difference between this. Another good example is TWTR Twitter. This thing, of course, there's always a story that can make all kinds of money, even though they haven't made any money yet. And Twitter is another one on this list. So maybe making a little support. We'll be back in just a minute. Give me a call, 877-927-6648.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the signal box works, visit the front page of TFNN.com.
Andy Hecht will be hosting his first paid workshop on TFNN, the Techno-Mental Trading Method, which is taking place Friday, March 28th from noon till 3:30 Eastern Time. Relying on his decades of experience as a professional commodities trader for some of the largest and most well-respected firms in the business, Andy will be teaching for 3 full hours discussing the application of the technomentals he uses when trading commodities, futures, inter and intra-commodity spreads, commodity-related stocks, ETFs and ETNs, and related options, and much more. You'll receive an added bonus of a quick reference guide that Andy has put together for everyone that attends that breaks down the U.S. traded commodity-based ETF and ETN products available to you as a trader. The Techno-Mental Trading Method, Friday, March 28th from noon till 3:30 Eastern Time. This workshop will be archived so that if you can't attend live, you can view it whenever you'd like on demand for 30 days. For all the details and to reserve your spot today, visit the front page of TFNN.com. You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And as we come back, we were talking about new IPOs, box IPO. Of course, Alibaba's coming out. Mark Cuban says he's happy with his decision, so I'll leave it at that. He is on the Shark Tank, of course. China, a few interesting things still happening in China. In Shanghai yesterday, hundreds of people rushed to withdraw money from a branch of a small Chinese bank after rumors spread about its solvency, reflecting a growing anxiety among investors as regulators signal greater tolerance for credit defaults. Kind of interesting that they're allowing a few of these things to roll through when they do have total control of the economy, but kind of interesting that it can send you seeing a few of these people getting scared out. There's got to be giant bubbles in all of China's industries over there, and I think probably the people that are running the show over there probably pretty good. Looks like they're doing well. Got some new terms that are being bandied around the last few weeks. If you haven't heard them, yummies and concrete gold. Yummies are now young urban males, and real estate in Europe, mostly in Germany, is called concrete gold. No one wants to buy gold. They want to buy real estate over in, especially in Germany, and it's starting to cause some huge problems, kind of like San Francisco over here. Just kind of interesting to read a few of these articles out here. FTSE was up 1.3%. Germany, DAX up 1.6%. France up 1.6%. Even the lessers are all up. When we look at Asia, the Nikkei lost 0.4. Hong Kong's Hang Seng pulled back 0.5 point or 0.5%. And China's Shanghai Composite eked out a modest 0.1% higher. Their financials basically saved their bacon going into the close, but banks were sliding down 2.5%, the Citic Bank, and a lot of those banks still having some issues out here. So keep an eye on Asia. Icon, old Carl, we talked about him yesterday. I think that's probably all the news that's fit to print. You can give me a call at 877-927-6648. You can email me at path@tfnn.com. I'll be glad to give my opinion about your stock or whatever you want to talk about. You can also post something in the den, and we'll be looking at that. Going to go through some stocks right now that are moving. Agrium, of course, probably a stock that would be near and dear to my stalkers, bailiwick. And Agrium, let me read the profile here just to remember. Produces, retails, and distributes crop nutrients, crop protection products, seeds, and agronomics primarily in North America, South America, Europe, and Australia. Retail and wholesale crop nutrients, including dry and liquid nitrogen. So a lot of that stuff, I guess, to fertilize everything. This is kind of an interesting one is this has made a previous high, tested it on a lighter volume, pulled back into the trading zone. But like a lot of these stocks, it's going to take one more test and run at the top, it looks like. Not a lot of volume today, certainly. We see a January 16th high at 920,000 shares, $95.79. March 6th got into that. And what do we beat it by? 20 cents? Yeah, 17 cents. But volume shrunk by about a third, 670,000 shares. Today, about 500,000 shares so far. So, man, what can you say? 700,000 shares, maybe if you're lucky. But look for this thing again at $95.79. Well, what are we at right now? High, low? Yeah, we're right there by a penny. So it will be interesting. 3 notches more on that gating threshold. Okay, we're going to turn that gating down just 3 more ticks, and hopefully the engineer likes it. And we've got Victor. How you doing today?
How you doing?
Good.
I was just looking for Nike and Coca-Cola, where you think they're going, and a little Twitter feedback.
What do you have here? Well, you've tested the previous high with higher volume, so you get a retest of the high on Nike most likely. Don't like the huge volume and gap down day back here on, the 21st at almost 16 million shares. So it's pretty much a coin flip. We'll be back after the break in just a minute. We're talking to Victor in Paramus, and we'll be back in just a minute.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
And we're back. Is Victor still on? I take that's a no. Anyway, he was looking at Nike. And what can you say? This one's a tough one. You got higher volume at the high, and you have a huge volume to the downside. I'm going to say that the energy already in this downside leg probably more than you would like, and probably the best case is maybe an ABC down, back down to $69. You get that much volume in there, you're going to go back down to the last level of support, which is at $69.96 high in October 9th at 4.6 million shares. Got into it, perfect volume strength on February 5th by 25%, and that's it. So other things we have. Anyway, we looked at Agram. Z in the Den brought up IBM. This thing's going to be interesting. And a lot of volume today in IBM. It's been a while since we've had any kind of sign of strength from this company, but it certainly is getting a little bit of that today. It's not just one thing. It's several things moving IBM in here, but it's got a few things. It's got to deal with Pitney Bowes and got a few other things out here, but working with Citrogen. Just had a bunch of press releases today, and I think maybe the totality of them is probably a better answer than anything else for what's going on out here. But needed 7.6 million shares from January 17th, and we're going to get 7.1 right now. So I think you can probably say this thing is going to at least duplicate the volume, and I think we're probably going to see a move back to 194.79. You got that today. So the next level up would actually be maybe this little high out here on the, June 18th of last year, 197.99. And if you can get through any of that stuff and the high volume down days, which you only needed, 4.5? Yeah, you need 4.5 million shares. So you've got, you get through much of this, you've got 211.98 opening up for IBM. And this thing actually did have some fairly decent tests of a low. It tested a 22 million share low at 172.57, went below it, closed back above it, and from 22 million shares back to 7.1. There was your buy point, and energy could be a little bit better out here today, but what can you say? Of stocks not doing so well today, Carnival Cruise Lines down and volume is picking up. We've got this going back into the gap that it left open on earnings on the 19th of December. That day it came up with 16.5 million shares. We've got about 10 so far, so it could still be a possible buy setup on a Wyckoff-style buy platform, but my guess is this thing's going to probably bounce for a few times. And, of course, almost all these cruise ship companies have kind of a bias to buy these things in the fall and sell them into the spring, and we may already be seeing a bit of that. Himax Technologies, boy, this was a high flyer, up to $16.15 on March 13th. A lot of these companies with rather dubious credentials, of course, over the last week and a half, have done nothing but slide down. This one came down. Volume has increased. We might be getting close to at least an exhaustion move low in some of these. HIMX is the symbol on this one, but certainly 19 million shares already today, and it opens up that $8.13 low back from November 8th of last fall. So I'm trying to remember on this company, what am I looking at out here? Develops and markets semiconductors for flat panel displays. That's what I remember. Principal products include display drivers, timing controllers for large-sized thin-film transistor liquid display crystals, LCD panels instead of LED panels. Of course, LEDs kind of pushing away LCD for the most part, but it is interesting. Clean up my desk here for just a second, so not get too far ahead. But again, you can call me at 877-927-6648. You can email me at path@tfnn.com, and you can post a message in the den if you would like. But let's just take a quick check in here of the market just to make sure. We're up basically 9 points on the S&P cash. Just a hair under 2.1 billion shares on the day. So it is a light volume, but of course we are higher. And my guess is that a lot of people shorted earlier in the day are probably going to have to cover probably in the last few minutes. I'm probably expecting this thing to close at 1871. So I'm not going to let the door open for any shorts here for the next few days. Okay, so there was Himax. MKC, McCormick. Now, this one's kind of interesting. A few of these stocks are setting up and giving us an opportunity to short these things, and certainly this one did today. McCormick Corporation down on heavy volume on the 29th of January, 3.4 million shares. This thing has come back all the way back up. Tried to fill most of the gap as much as it could to $68.50 today, but 1.3 million shares and kind of intraday reversal patterns on these shows some of the weakness that continues out there. A few of these counter trend moves in the market are rack space. This thing also kind of a opportunity to kind of go a little higher out here, maybe making a tiny ABC down. But what you want is a test of the $30.96 low from, what is that? February 12th. There's 14 million shares that day, so it wouldn't be that tough to see. Yeah, someone's saying ABC up on IBM. Take a quick look at that and see. I like it a little bit more pronounced, but I think what they're looking at here is possible expansion. If you had it, would be that as the A, and that is the B, and that is the C. So, yeah, you'd have an ABC. That'd take you to 198. I think that's probably what you're looking at. Take you to 198.94 for a 1-to-1 ABC. Somebody in the den posted that. Probably not one of the clearest ABCs out here, though, but interesting nonetheless. Rio Tinto. Some of these stocks actually getting a small respite over the last couple of days after hitting lows. What you dislike is just all that heavy volume. Now, you can say that this thing retested the low 5 days later, but normally I like several weeks in between my lows being tested. I wonder what that's a euphemism for. Anyway, we've got 7.9 million shares, and they kind of came back in there and tested it, but not a whole lot. We're getting back into a lot of these huge gaps down in Rio Tinto, and maybe you could get a 50% retracement on this thing. That'd be $55.90, but I don't know. Seems rather dubious at the moment. Splunk, another one of these recent IPOs, had a major reversal day on the 28th of February with massive volume out here, coming back down and testing and hitting the previous January 27th low that had 2.6 million shares. Yesterday with 5.8 million, even today 4.3 million shares. So we are way into that little move right there. The next level down on Splunk would be $66.60, and that's the December 18th low out here with 1.2 million shares. More likely what you would like to see is probably a move back into about $63 with very, very light volume, but these last 2 days not giving you a whole lot. Got a question in the den about EMC, and I don't know what the idea is out here. Well, certainly it's tested its last major high out here, which was September 21st with 23 million shares. Went over it with 6 cents today, 24 million shares already. So a few of these. Energy is about the same as it was in the leg down, so most likely a bigger trading level. And this thing could probably, if we have a few more days, I think it could get into that gap in the upper 28. So what, 28.80, 28.90, have just a little bit more out here. But energy on the legs, not that bad. Energy at that top's not bad. And could get into that gap. That gap actually did come down on 14 million shares, so not that much when we're talking 24 million today. And that would set you up for a possible test of the $30 high. And what do you got? That was actually, that $30 high was a failure. You do have that April 21st of 2011 high out here with 29 million shares. So several things to take a look at. What can you say? This thing's getting into heavy, heavy resistance. And let's see, what else do we have? The dip in Carnival Cruise Lines is not season related. It's because of the spill in the Galveston ship channel, which has blocked all traffic going into the Gulf. Thank you, Douglas. I hadn't seen that yet. But they do get kind of seasonally down in the summer, from my recollection. Almost all those cruise companies do. But thanks, Douglas, for passing that along. Hopefully everybody is listening to this part of the show in that. But they're seasonally about like natural gas. about this time of year, maybe another week, 2 weeks, most of those cruise ships get a little weak in the knees until the bad weather starts coming again next fall. So, and probably well-deserved, because you're going to make less money in the summer than you are when everybody's trapped up north in the winter. But thanks again, Doug. And he's from, I guess it's Doug S., not from. But he's got a nice texture to his emails, too. You don't always see beautiful textures like that in an email. And, of course, what else do we have? WAG, Walgreens, and an interesting kind of reversal out here on Walgreens today. Certainly opened about where it is now. I tried to get up to that $68 level. Not much having it out there. So a lot of these stocks are finding lots of sellers anytime we move up a little higher, and probably not much different than what we have right now. But what do we have? Is that right? Yep. Up 8 points on the S&P cash. So that's all we need to look at right now. Boy, volume looks like it's stopped at 2.1 billion shares. So that's it. We got a couple of minutes left in this segment. So let's go look at some other stocks here. Kind of interesting to see Alcatel-Lucent. I actually had this in the newsletter this morning as one of the ones I'm looking at. Let's bring this down. But there's a handful of stocks out here. I am not bullish by any stretch of the imagination, but there are a few stocks that don't look half bad. If something turned around and we started getting volume in this market, I'd take a look at. But Alcatel-Lucent, I know a lot of people have called in before, and probably going to do fairly good, especially with the rest of the world. They make a bunch of routers that are less expensive than Cisco routers, but most of the people that are buying these Alcatel-Lucent routers are glad that they, one, are not Chinese Huawei's that are bugged, and or that are Cisco routers that are bugged by the NSA. And they do make the source code available, I think, to buyers so they can go through it and look at a lot of it themselves. And what basically now is a French company pretty much came off the bottom and did a fairly good job. Got a huge contract in China, nonetheless, one of the few companies over there. And maybe even the Chinese don't want to be bugged by their own Huawei. Maybe there was some other reason they bought them, but interestingly, nonetheless, a nice day out here. Of course, this thing gapped up with huge volume, so that's going to act as a support for a while. 60 million shares back on October 31st. This thing's been in that trading range from that date up to about 468, 450, and we are back down to that 368 yesterday. A little doji out here today, but maybe 350. Volume remains light. I might even look at something like this in a counter-trend rally. Some other stocks are breaking in to those huge days of strength. This one's got a smaller gap, but some of these stocks actually, if the market does turn around, could be fairly decent buys. And we'll go through a few more of those in the minutes to come. Anyway, give me a call, 877-927-6648. That's 877-927-6648.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you, other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Join Andy Hecht as he teaches you how to make money in commodities. The Commodities Hour, next on TFNN.
And as we come back, market slipping a couple of points, but midpoint, point and a half since we talked last. So what is it? It's up 7 points on the S&P cash, 2.1 billion shares. So we are higher, lighter volume once again. And I am looking at a market that I think is going to gap up one day, probably, if we're lucky, stay up there, and then come back down and make an island reversal. And once and forever, put the nail in the coffin of this move in the market and let us get a retrace of some level. Let this market breathe a little bit, but looks like maybe they're going to hold it up for a few of these stinky IPOs. And it's going to be a little tough. I had somebody in the den mention Hewlett-Packard along with IBM. Very light volume. You don't want to see that today. Certainly lighter volume than the little kind of dragonfly thing that it had on the 20th with 23 million shares, 24 million shares. Of course, just 10 million shares today. So could this thing come back to $29 range? I think it could, maybe $29.50. There's a gap in there. But if this market pulls back, probably not one of the weakest of the tech stocks out here. They've done a good job of turning that company around. And unlike Yahoo, where 95% of the value of the company is really another company, Hewlett-Packard doing fairly well out here. And not the ugliest chart out here. But the last two legs haven't had a lot of energy in them. If this market pulled back, I'm probably going to find fairly decent support at that $26 level. Other stocks of interest today, Huntington Bank shares. We continue seeing these banks hitting highs on lighter volume. A couple of dojis out here the last couple of days on H-band, but the big thing is you wanted 23 million shares from the January 22nd high. Just a hair under $10, and you've gotten 13 million shares and 15 million shares and 7 and 6. So volume continues to wither away on a lot of these stocks up here. One of the stocks I wanted to see how it did today was Schlumberger. This was going against its $94.91 high from October 21st. 11 million shares. We wanted that. Got about 6.3 million shares. And certainly the energy on this last leg up in these oil companies looks like we could have a nice little move back out of here. Now, I know Andy's in the bullpen here, and I keep on seeing these things that say he's going to have a webinar on Friday, but it doesn't say what the time is, only that it's going to be 3 hours. Maybe he'll post that before the end of the day, because I've been wondering. It's going to be Friday, but what time Friday? And maybe he'll bring that up on the show if he isn't quick enough to type before the end of mine. Other stocks of interest, some of these things that are pulling back, 9 to 3:30 Eastern time. So it's going to be 6 hours, huh? I thought it said 3 hours. Anyway, United Therapeutics, UTHR, noon to 3:30. Okay, that makes a lot more sense. United Therapeutics Company, another company that actually doesn't look too bad out here on the pullback. This thing had a huge sign of strength on the 23rd of December, popped up on a pretty massive volume for it, 4.8 million shares. Coming back into this gap, last time, February 5th, 1.2 million shares. We have 800,000 shares yesterday. Really dipped back into it. Tried to rally out here today. Again, this is a counter trend in a market that looks like light volume to the top. So I can't jump on these, but certainly there are a few stocks that if this did turn around, we'd have to take a look at. Well, Andy's coming up, and I remind you, sell when you can, not when you have to. We'll see you tomorrow. Same bat channel, same bat time.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.